Hello everyone, it is Thursday, February 22nd, and this is the video for today. So we're going to start with our long-term fundamental bias, our technical bias. We'll zoom into the short-term for the market, what happened today on the current price action, what is our outlook for the short-term as well, what should our swing traders do, our day traders do. We're going to review the pick from the last video, which should be very easy because there was no pick in the last video. And then I will give a pick for this video. And at the end, I'm going to go over some of the trades I took and some of the trades that I am in as well. So let's start at a longer term time frame for the market. You can see that we have had a very nice run up, technically and fundamentally. Nothing has changed since the last video. Nothing has changed to inflation, to the FOMC rates, to the macroeconomic backdrop, to the global backdrop. We are still watching all of those patterns. Two things I'm going to add that I didn't talk about in the last video. First is China. So we know that FXI has been very, very weak. That is the tell. Let's pull up the chart for that very quickly. Now, it made a nice run here after China has announced they are lowering some of the interest rates. They are banning some of the short selling here, but this is the chart of FXI on a weekly basis. It is bearish. Money is flowing out of China. There is concerns about debt regarding its real estate businesses, its areas. Definitely read more into the news articles there. But again, it's not something that I am actively trading, but it is something we're watching out for. Something that, because Pete is watching out for, I'm also taking a look at it as well and trying to form my own analysis. This is important because we always want to keep a forward-looking view of potential headwinds or macroeconomic events that could impact our trading. Second thing is the concentration of this rally. The forward PE ratio of SPY right now is 20. If you look at the Mag 7, that forward PE ratio is 30. The rest of SPY, it is 17.5, I believe. The rest of the S&P 500 is fairly valued with the historical 10-year average of 17.5. The Mag 7 stocks are heavily overvalued, quote unquote, overvalued in their forward PE ratio. This is telling us we have a very narrow concentration defining this rally, led by semis, mega cap tech. Those are the stocks that are driving this rally up. And it's putting asset managers in an awkward position because they don't want to over allocate to a certain sector depending on their fund, right? They have certain limitations on how they allocate their money, but they also need to generate great returns. So because of this, we know that asset managers aren't really going to chase. They are going to maybe nibble, buy pullbacks, things like that. All right, longer term technical bias. Still, everything is all systems go. Let's zoom in what happened on a shorter term time frame. The past couple of days, we were looking at what could happen in the market. We could have a deeper pullback to 490. We could have a compression near the high of the year. Or we could have a very deep retracement to AV WAPQ. All of these would be bullish scenarios, but they would affect how we view our longer term bullish bias. If we got a very deep retracement, it means our longer term outlook would be less bullish and a little bit more neutral. If we got a short pullback or a compression, we are still pretty bullish on the market. So you can see here, we did have a bit of a wedge forming. And let me draw that in very quickly, just visually. We had a wedge right here. And what happens with wedges? We break them to one of the sides. So we broke to the upside because of very strong NVIDIA earnings. Beat expectations, really pushed the market up. Gap up, and we held the gains and we added to those gains. That is very important. So on a short-term outlook, to me, this is a technical breakout in SPY, a bullish breakout. And we expect these gains to hold. We expect the bid to be tested, right? The breakout should be tested, so we're going to test this level right here, which I believe is going to be important. The previous all-time high, we're going to test that. If that holds, and then we have a little bit of a launching pad for us to spring up. So if you're a swing trader, I would recommend taking some swing longs here short term. If you look at the outlook for next 2 weeks, there's not a lot coming up. We're through all the mega cap tech earnings now. No more major economic releases, no FOMC meetings, no inflation numbers. So not a lot happening in the next 2 weeks, and you're gonna be hard pressed to find short sellers at this level. You may see profit takers, but it's tough for short sellers to pile in at the all-time high. A couple of things we're watching for here. Will we see a very steady retracement up? So if we draw a nice parallel trend line right here, we have this top end of the channel. And if we look at the bottom end of the channel right here, depending on how you want to draw it, what gives the most touches, you can see that we do have a pretty nice channel over here. And if we break through the top end of the channel on a nice long green candle, that could be a sign of a buying climax. So we're watching out for the buying climax here, because it would give us time to, it would be a sign of a potential trend reversal. Buyers extended a little bit too high, and we have some serious profit taking. So we're watching out for a buying climax, we're watching out for a failed breakout, and we're watching for a pause or a steady drift higher. We could see a little bit of compression and then a steady drift higher. So that's kind of what I'm anticipating here, and that's how I plan to trade it. So swing traders should be in some swing longs, in my opinion. If you could find some put credit spreads, that would be great. You could distance yourselves from the action. The market's made a pretty big move, so you may not be able to get those fills. I think some weekly at the money call debit spreads. You could even do some 1 month out deep in the money calls for short-term swings like I'm doing in order to profit on this move over here. There are also still some trade trading opportunities. Let's look at the market on an intraday basis. All right. So we had a big gap up, long candle, a little bit, not long candle. We had a red candle to test the breakout, and that was immediately met with buying. All right, this was nice. However, we know that gap ups have a tendency to fail. We have a huge move that happened overnight. The tendency is to take profits. So huge move up, bear cycle coming in at 10:10. All right, so we see what happened. We wanted us to hold the high of the day. So bear cycle coming in. We're holding the high of the day. LRSI crosses down briefly. We test VWAP. We're holding VWAP, and then we start to inch up higher. Get this LRSI cross and this 1 OP cross. Now, you can see that 1 OP ended up still going down. But over here, I said, okay, this is a nice entry point for some day trade longs. We know that the gap up is held. We have absorbed all the profit taking if some math with buying, and we should have a nice steady grind up higher. So that's what I saw. I expected a nice steady grind up higher today. If we got a double top and some stacked red candles, we knew we could challenge the low of the day, but all the solo candles were met with buying, and then we slowly inched our way up. Steady buying today. Steady buying until the very end of the day where we saw some profit taking. Now, the key is here to stay in your longs until we break this channel. Once we break this channel, you can really see the selling pressure start to accelerate, and we have a buying climax followed by a bearish engulf. When you saw this bearish engulf at 230, I would be out of your day trade longs because we could see a pullback. We could see some profit taking. Market ended up holding the gains over here at the top end of the channel. But this was a day of a steady move up. And there were some excellent opportunities for some day trade longs. So I'm going to point out 2 day trade longs right here. First one was SMCI that I took. So daily chart decently strong here. Had the pullback, and we got an H1 LRSI cross up. So we knew that the pullback was over. We have a pretty decent bullish flag on the stock. Very choppy, but it held to a VWAP, and now it is bouncing up higher. I'm going to take off the extended hours here. So where would you buy the stock? Well, we knew that we had some market confidence here at 1110. All right, so let's look at the stock here. Not super strong earlier in the day, but it started to pick up some steam right here at 11:15, 11:20, broke through the high of the day when the market was stalling. So it started to gain some strength. So entry number one was right here. You see a couple of things. First, volume is ramping up, right? Ramping up relative volume, new high of the day, gaining relative strength, and we have the LRSI cross. So you come in over here and enter here, somewhere here. You can take some nice profits on the day trade move up $10, $15 easily. Second move here, let's look at 12:30. We have a compression break. We have a compression break, compression, compression break, compression, pop up. So that's how this stock was moving. Compresses and then pops up. Kind of some decently steady price action, not the best, but heavy volume. So you had an entry point right here. You could take some day trading profits. When we tested this level right here, we knew that there is some resistance at the $1,000 level. So we got to be a little bit wary of that. Rejected off this D1 resistance here. Good compression. Another compression break at 3 o'clock. Market's not doing much, but we withstood the bear cycle, and we had a chance to move up over here right around 320, maybe 325. You can see here this stock is starting to gain some strength, starting to move up. So you can enter in this compression break, which is what I did. And I took a nice $8 over here. And I took a nice move right here at this 12:30 candle. And I took profits right over here around 1960. It was actually a CDS, so I couldn't get the profits that I wanted to, but that's the idea for the day trade. So SMCI was a nice day trade I took today. Let's look at AMD. AMD is a good stock in learning how to get out of a position that's not in your favor. So earlier in the day, AMD, excellent price action. Again, 11:10, 11:05, we started to get some market confidence. I took the trade right here, broke the new high of the day, very steady price action on heavy volume. Came to new high, pulled back again, and then when the market started to rally again, you can see that AMD is actually not really rallying here. It's losing a ton of relative strength. So I knew that I had to take the small win or a scratch on the next move up because this was losing position. So once I saw this relative weakness, I reduced my outlook for the day trade, and it took a very small win, basically a scratch on this call debit spread as well. I'm still learning how to do these. AMD was a little bit better because it's more liquid, but I was able to take some decent profits and get out of the position. You can see here, didn't really sell off, I would say, but didn't really rally with the market. There's too much profit taking at this level. Could have held it overnight? I could have, but don't have that confidence yet in these call debit spreads. So not sure if that was a winning strategy. I'm going to have to do more of these. So those are the trades. Now let's go over the pick of the video here, which is GE. GE is my pick. So the reason I picked GE is the following. First, we have a very strong daily chart, steady grind higher, very tight price action. Pulled up way over here. Remember, we traded GE much earlier, and we took profits as a day trade on the 14th. As the market went down these past 3 days, you can see how GE held its own, right? Here's the market on the 16th, 20th, 21st. Same days, compressed. The market made a new high, it made a new high. Now, it didn't move up as high as the market did, but the fact that it had relative strength here means that buyers are engaged. So I took GE long. I took the March 15th 145 put, 145 call, because it had the most liquidity. March 22nd didn't have a lot of liquidity at the delta that I wanted to, so did not end up taking that strike price, or else I would have gone a little bit farther out. But I do expect that this move should profit in the next few days. So GE is our pick of the day, and we're going to add it to our YouTube picks, which I've already done. Let's check out the other picks and how they're doing. First is Confluence. So made a nice recovery today. You see how it rejected this level here. So I want this to clear this level, and then we should have a nice leg up higher to our profit target. Ally is also not doing great, but now we have a little bit of stronger market tailwind over here, and we're looking to take profits again, or take the smaller loss at this $37 level. JPM continues to be very, very nice. You see how it held the gains here, moved up higher as the market went up higher. We're still holding the stock because we're now bullish on the market, bullish on the stock, and we have some time for our options. BSX, excellent move here today. You can see it's up after hours. So we're looking to probably take some profits. We got in probably at this 60, we're probably about break even right now. So we want to get around to 67, 66, 70. Looks like we might hit that after hours. But BSX is still doing very nicely. And then we have Crowd. Crowd took a big hit from PanW. Nice recovery up today. So that's why it pays to be patient on both your winners and your losers. Now, I'm still not confident that this can win, but I do like the recovery that I'm seeing here in Crowd. And given the very strong nature of this stock and this trend, this could be a very nice buying opportunity. So we're going to give it some more time. We're going to see if we can fill in the gap, if it can get back into its range over here. We'll see what the market does and how it responds. I am prepared to cut Crowd if it's not doing what I want it to do, but I gave it a chance to recover, and I saved a ton of money by doing that. So finally, I'm going to go over my picks that I'm in right now. Very similar, but my Netflix put credit spread is doing nicely. My Meta put credit spread is also doing very, very nicely. You can see how it's going up higher. This can expire tomorrow, so it'll be worthless. And my GS put credit spread also rejecting at this level here. Another failed breakout, but I don't care if it breaks out or not. I just need it to hold above this level, so I'm not worried about GS. I'm going to add GE to my positions. And the last thing I'm going to talk about, just with JPM here, if you remember a few days ago on the 20th, we added the 185 short call expiring this week to make a diagonal. So I was in a bit of a pinch here today. JPM hit my profit target, so I was thinking I have a couple scenarios. I can close out the short call for a small loss, take the full gains of the position, or I could let the short call expire and then ride out the long call into Monday, or close the short call on Friday and take profit on the long call tomorrow. So in this situation, because I can't only hold on to the short call, I don't have the option level accessibility, it really depended on my market bias. My market bias is bullish. I think we might have a day of pause over here, which is fine. Because I have a bullish market bias and a bullish outlook for the next week and for this stock, I figured the most profitable course of action is to let the short call expire, ride out the long call, and take more profits. So something I'm learning on with diagonals, and there should be more of that to come in the future. So G's the pick for today. We're going to take a look at it tomorrow, and that is all for today.